Okay. Second topic is changes in monthly reporting, and look for your notes coming up. I'll tell you when to look at the notes, where the figures are, but you will need your notes for this. It's not something you're going to be able to figure out simply by listening to me. What we want to do, we want to make the reporting more consistent. We currently do monthly Excel sheets, which add up to an annual Excel sheet. Those Excel sheets then fold at some point in time into your annual accounts. From your annual accounts, we then prepare the company's tax returns, your personal returns, etc. Now, in the past, we've had a few period adjustments. People have moved the year ends, or we have moved your year end for you to tie up to the VAT returns, for example, is probably the most common one. Or we've moved a year end because you're going to be closing your business down at some point, or winding the business down while you're having taken a break. Lots of reasons why we do that. But what we have found is quite a few cases where the Excel doesn't quite tie up to your year-end accounts. That results in queries. It results in us having to investigate it. We need to look as to where those differences are, how do the differences occur, what is the difference in terms of the financial value, and as a result of that, the tax consequence. So what we're going to do to eliminate all of that is, instead of the monthly Excel, we're going to put the data straight onto VT, which is our accounting software. So we're going to put on your sales invoice, we're going to put on all your bank statement entries, bearing in mind that the bank statement will show all the company expenses if we refer to our first section on paying expenses from the company account. We'll add in the occasional expenses, we'll add in some of the cash expenses that you've incurred when you've drawn money from the company's bank account. We'll put all that on. We'll do the VAT adjustments. We'll add back in the flat rate scheme adjustments. We'll do everything we did on Excel, but we'll do it live onto the accounting software. At the moment, what we do is we prepare the Excel, then we load the Excel and the transactions onto VT anyway. So we're going to get rid of VT. I think that's get rid of Excel. It's a duplication. We want to eliminate all the risk of these differences between the Excel and the year end. Now, the information in VT is going to be identical to what we had in Excel, just a different format. If you have a look now on the notes, you will see a sheet that kind of looks like that. There. Okay, look at that sheet for me. Now, this is the way Excel currently works. So we show you the income excluding VAT, we show you the flat rate scheme, we show you the expenses for the month, we show you profit before tax, etc., 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 with a total of how much to pay, in this case, how much to pay Joe. Now, these figures, by the way, are nobody's figures. We made the stuff up. We're pretty good at making stuff up. So that's what you currently get from the Excel. What you will get when we move to VT in October is what's on the next page of your notes. You'll see, I'm just looking at my notes while you look at your notes. If you compare the 2 pages for me quickly, you'll see the income excluding VAT as fees is the same. Flat rate scheme gain or other operating income, we will rename that flat rate scheme just to make it easier for you. Your total income is the same. Your expenses are all the same. You'll end up with a figure for your company expenses of 2110. That matches the company expenses 2110. So your profit before tax of 3019.53 is now 3020. There's a pound adjustment. That's fine. So you will get exactly the same thing, just in a different format. Then we will tell you in an email with a summary statement attached to it, what we call a dividend voucher. We will tell you what your profit was, how much you can draw as a dividend. This is also building towards the long term of making tax digital. We're going to have to file, one would assume, all of this information with Revenue and Customs every quarter. We think, we don't know, but we think it's going to be in line with your VAT quarters. But the system hasn't been finalized, it's still in discussion. But this is the sort of thing Revenue and Customs are going to want us to file for you. We will then tell you, following on from that, what you can draw as a dividend and how much to pay yourself. Bearing in mind that you've already paid the expenses from your company account, you may have some cash expenses that you paid personally. That will be added on. But you will get your salary slips, you pay yourself your salary, and you pay yourself the dividends we give you on the dividend voucher. And you will ultimately end up with exactly the same amount as you had before. Just a different format. You won't get the Excel, you'll get a VT, a set of accounts. And if you have a look at, actually, funny enough, if you have a look at that very last page, you'll see, like that page there, you will see the figures tie up and you will get exactly the same amount of money either which way. Making our lives easier, making your lives easier, hopefully, and moving towards making tax digital, which is unfortunately something we're going to have to live with. We're going to have to do. It is not an opt-in. It is compulsory for, we believe, small to medium-sized enterprises, which is about 95% of all the companies in England and Wales. Okay, so that's all done for you. Now, what we will need from you each month is not going to change either. Bearing in mind that we've covered a lot of it in the first section about paying your expenses from your company account, we will still need your free invoice that you send to your client. We want that from you every month, please. We want your company bank statements. Now, this company bank statements covers all your accounts. We'd like you to send us your normal checking account, any savings accounts that you have for the company, VAT savings account, tax account, or just a general savings account, all perfectly fine. Send us all of those statements, and your expenses as normal, which we can then tie up to your bank statements. Anything else that doesn't tie up, put it in a slightly separate pack or different list on Excel. What you paid with cash, what you paid personally, and we can put them all through, and you'll end up with the same figures. So what we need from you is not going to change a great deal. Slightly different format. Other than that, no, everything else should stay the same.